Hello and welcome to this Trades and Tutorials video. In this video, we're going to take a look at a few patterns that will set you up to be able to catch some of the trends, kind of like the ones we saw on the SPYs there, maybe the Dow here, IWMs here, even the Qs right here. And the reason I'm doing this video today is because with Trump now officially in the driver's seat, the markets really have kind of been put on pause, and there's a few patterns that exist right now that would set us up for either a nice trend to the upside or a nice trend to the downside. And there are a few tricks to being able to identify not only when it begins, but how to stick with it. So before I get started, I just want to make sure that if you're just finding us on YouTube, please like our channel, and also know that you can find more information just like this at marketgauge.com/tutorials, as well as via Twitter on two different accounts, at MarketGauge and at MarketMinute. Also, if you're not already watching this in HD, just change your setting in the lower right-hand corner. It'll be a lot clearer. I think you'll like it a lot more. All right, so there are a few tricks to seeing when markets are likely to trend, and also knowing that the trend is getting old and may reverse. If you know that, then you also know that you can buy near the low of the day. Now, if you can buy near the low of the day, I find it's a lot easier to stick with trades. It gives you trades that have lower risk, and that all adds up to, in my experience, much more enjoyable trading. So let me just give you a quick sample of what I'm talking about. The first pattern, however, I want to point out is a pattern that showed up in the Qs. And the pattern is a really simple one, where you've got a really well-defined support level. Works even better if you've got a well-defined range, as we had here, and that support level breaks. It breaks, but then the market doesn't follow through the next day, and in fact it does the opposite. It goes right back up, and back up means back over the support level. Right now, when you see that, I don't have an official name for it, but I've heard of it referred to in some cases as a sushi roll, I think, if it blasts out. But without worrying about a name, it's really straightforward. Support breaks, doesn't follow through, immediately reverses, and it happens in a good situation in the overall trend. In other words, we're in a bullish trend in the Qs. They just hadn't really moved much, and they did the head fake to the down and then started moving up. Once they start to move up, there's another way to identify that. I'll get to that in a second. And you can take advantage of then being a buyer near the lows of these days, and then it only takes a couple days, the market starts moving your way, and you've got yourself in a good position. So here's why this video is really important right now, in my opinion. The IWMs have a really well-defined support level right here around the 135 level. Right, a little higher up in here, but it's really settled down now to this 135 level, or 134 level. It's also sitting right on the 50-day moving average. Now, for the last, 4, 5, 6, maybe even 8 weeks at this point, the IWMs have been nothing but chop. So why would we expect that they're going to turn around all of a sudden and start to head higher? I'm not really sure that they will, but I think they will. But I'll know when it happens simply by looking for a couple of patterns. The same thing could happen on the downside. It could start to move down and start trending down. Either way, it's likely to be a decent trade. If it's to the upside, I think it'll be a much better trade. So let's focus on that. So the first thing it's going to have to do, it broke the support level and didn't follow through. The next thing I want to see it do is close over this magenta 10-day moving average and close over the high of the bar that made the breakdown low. All right, so that's the first step. The next step is for it to then move higher again and not take out the prior day's low. Now, I know that sounds really simple, but coming after a head fake, as I keep calling it, the break of support, and then 2 or 3 trending days higher where it closes or moves above the prior day's high, doesn't move below the prior day's low, and makes some progress, just like we saw here in the Qs, right? Qs took out that high, closed over it, moved higher, and then the next day higher, higher, higher. They broke the low here, but for the most part, they've been moving higher. The other pattern I want to point out is that when a stock or a market starts to move higher like this, it often, or I should say rarely, takes out the low of the prior day. Now, the other thing I want you to notice is that when it starts moving like that, the wicks are relatively small on the downside, which means that the open occurs relatively close to the low of the day. Now, this is why I'm also re-releasing a replay of a recent webinar I did on how to buy near the low of the day and how to identify the best days to buy, whether you're day trading or swing trading or trading with options. Because this relationship between where the market opens and the low of the day is actually quite predictable. And the days in which you want to try and buy the pullbacks versus buy the momentum to the upside are also actually quite predictable. And the easiest times to do this are often after a period of consolidation. Now, there are several different patterns that we look for as well, but one of the biggest ones is after consolidation, when you see a move begin. That's where you really want to hone in on it. Another one is when you see, say, a violent move. So we saw that in IWMs down here, after the election. They gapped up, they took out the 10-day moving average, they started moving higher. And here again, you didn't get huge days, but the market never traded below the prior day's low. And for the most part, it had relatively little movement to the downside after the open. When you know how to take advantage of that, when you know how to take advantage of intraday price action, it means most of these days enable you good opportunities to get into either day trades when they pull back a little and then take off for the rest of the day, or swing trades where they pull back and then keep going and then keep going and going and going, and that's what you see in situations like that, right? Then once they start to move lower, you have the same thing. Notice it didn't take out the prior bar's high for 3 or 4 days. You knew it was pulling back. And then as soon as it did, back above that 10-day, that same pattern happens, right? So in this replay of the webinar, I want to show you how you can focus on being a buyer near the low of each one of these days. And that, as I said, provides great entries. And once the market starts to get messy and you don't have that trend, that obvious trend look to it, now you're just kind of waiting for the next big opportunity, which could happen if the market heads higher next week and exhibits this pattern. All right, you've got the pattern in the IWMs, you've got the consolidation in here. Now, SPYs have not really broken and done the head fake yet, but they don't always do the head fake. Knowing this also enables you to buy the right breakouts. Right, so this one hasn't broken out yet, but here's an example. I just gave one to our users actually just last night. So Adobe was a breakout, and using the same things, you can see how it's starting to move, using the same tactics that I just described, and I'll describe in the webinar. It broke out. Some people will be thinking, oh, I missed it, but in fact, it had a really nice pullback and reversal intraday, so you could have been a buyer right there, and now you're a buyer on or you're long Adobe as it's really just starting to get going and breaking out. There are a lot of stocks, and this is one of the patterns that you should be watching out for right now with the new administration and the new year. Stocks that have had a good rally, then they've consolidated, and if they start to move higher again, these tactics that I'm showing you here and then I'll show you in the webinar replay are exactly what you want. And here's one other one that you might want to keep an eye on, Apple. For the same reasons, it's gotten off to a good start in January, and now it is consolidating really at an important level. If this starts to get the momentum that I've just described, this is when you're going to want to be buying near the lows of the days on little pullbacks and knowing which breakouts to buy as well. All right, so a few simple patterns. I know they sound really straightforward. They really are that easy. If you just look for these 2 to 3 day moves that have that look to them and they're in the right location, and they turn into moves that just keep going and going, sometimes for 2 or 3 weeks without any real pullbacks to shake you out if you're a day trader. Perfect for option traders because the moves happen immediately, and perfect for swing traders because if you're looking for a 1 to 2, 3 week move to either take quick profits or just get you started on a bigger position, this is a good way to do it. And of course, day traders, we're focused on getting in on exactly the right day, and that's what this is all about. So if you wanted to learn more about how to do this, go check out the replay. It will only be available for a couple days. And if not, well, I hope this video helps, and I'll see you in the next video.